Hello, my name is Maya Sybil, and I am a reporter and producer at Insurance Investor. And today I am joined by Jaclyn Bouchard, who is an EVP, Head of ESG Solutions and Corporate Responsibility at Preqin. And hi, Jaclyn. It's wonderful to have you here today.
Thanks, Maya. It's great to be here.
And Jaclyn will be giving the introduction for the risk and reporting stream at the ESG Investment Leader Europe event, which is on in London on the 2nd of November. We're excited to have her and to hear a little bit about what she will discuss on the day of the event. So this is just a bit of a taster. Without further ado, I'm going to dive straight into the questions. And Jaclyn, our first question for you is, when it comes to investing in alternatives, what would you say are the biggest challenges, but also the biggest opportunities around ESG?
Yeah, great question. So starting first with the challenges, the biggest challenge when it comes to investing in alts is, of course, ESG data. And that includes both data availability and data quality. Private markets are opaque by nature, which makes sourcing or accessing accurate ESG data from private companies really difficult. And also, in most cases, these private companies might not know exactly what to measure either when it comes to ESG, due to the overwhelming landscape of just getting requests from all over the place, the varying methodologies, etc. So this leads to a lack of trust in the available data. Another challenge is the diversity of the asset classes in alts, which means that some asset classes are more regulated or private than others. And so having a holistic perspective of a multi-asset portfolio is incredibly challenging. ESG is also a relatively new field within alts, which may be surprising to hear. But so and so the fixed and variable cost of setting it up can be high, which makes it quite costly to implement. So this means that there's a general lack of ESG related professionals with extensive ESG experience that are currently embedded in alts. They're available in the market, but not necessarily in alts. So talking about opportunities, alternatives offer an invaluable opportunity due to their capacity and capability to influence and work closely with an asset, and then find the value addition opportunities that not only increase returns, but also value for society and the environment. What I mean here is from companies operating in niche strategies, developing technologies to solve for carbon capture, to new business lines and traditional companies derived from a better understanding of their ESG capabilities. The fact that in alternatives, you can have whole or majority ownership and hold an asset for quite a long time, you can quite literally create the change that you want to see, which is a very big difference from public markets where you may only own a piece of the company. And with that, there's big opportunities related to sustainability objectives, like aligning with net zero targets, reducing carbon emissions, achieving higher employee satisfaction, better governance, more transparency, etc.
I mean, the second question is just around sort of regulatory frameworks and how that changes the landscape. So how are developing specifically disclosure requirements, we can think of SFDR, TCFD, changing the appeal of specific assets, and then how do you see asset owners adapting to these changes?
Yeah, so the alphabet soup of regulations. So it's worth mentioning that SFDR regulation is not a voluntary framework, while TCFD is voluntary. Today, we are seeing it being embedded in regulations, but these regulations are influencing investor demand. And we've seen an increase in appetite from asset owners for vehicles that are classified as Article 8 plus or 9 under SFDR. And there is pressure on fund managers to move to these classifications for funds in which they are already invested. So regulations do tend to shape the demand and flow of capital, but that hasn't happened seamlessly. It's been rather confusing or challenging for participants due to the conversations like unintentional greenwashing derived from SFDR requirements, or just generally the implementation of a pretty rigorous top-down one-size-fits-all regulation. So as a result, asset owners are trying now to engage more deeply with their fund managers and asking more relevant questions regarding disclosures, which is great and quite honestly much needed if we want to deliver on the ESG goals. And then talking about TCFD, the voluntary framework, these influence investor demand, but the link is not so obvious. So having TCFD report talks about your commitment to measure environmental metrics and integrate climate thinking into your governance and strategy. So it does send a signal, but it's not yet a key deciding factor for asset owners to allocate.
Interesting. I mean, that's on the sort of asset owner side. Then on the asset manager side, how would you see them handling these increased pressures, let's say from investors around ESG integration? Obviously, there are multiple sides to sort of the puzzle.
Yes, so we can, I think all agree that there has been an increase, an ongoing increase in pressure from
Yes.
investors around ESG integration, and managers are being inundated with requests, some standard, some slightly more tailored to the investor requirements, etc. So it's getting a bit unwieldy.
Yeah.
And it takes a lot of time and resources. So
Yeah.
managers have started to create standard templated reports to share with their asset owners, which is helpful. Our data in our Preqin ESG and alternatives report this past year, 2023, we saw that some smaller managers, particularly in Europe, are demonstrating strong levels of ESG integration in order to attract asset owners. And by using ESG as their growth strategy, these managers are prioritizing ESG integration, reporting, and engagement. So overall, it seems like people are embracing ESG integration in unique ways to make their own and to achieve their own goals and to try to streamline ESG data collection, reporting requirements, etc. that are kind of continuing to increase from investors.
Yeah. I mean, we've talked about reporting, and obviously ESG is a really big category that sort of encompasses a lot of smaller parts and a lot of smaller topics. So within that, how do you actually ensure that you're collecting, let's say, the best, most necessary data? And where are the data gaps? What are you trying to fill, and what are you currently focusing on into the future?
Yes, so we rely on our strongest asset, which is the trusted relationships with LPs and GPs globally that we've developed as a business far before we had ESG, just being the largest database of alternative data and now the largest database of ESG data in alternatives. So to gather ESG related data points from every possible corner, we leverage these relationships with private market participants. And when the data points don't exist, we provide you with viable estimates based on multiple data sources, both proprietary and public, and innovative models scaled by our data science engine. This is all developed by our team. So essentially, we'll get you the real data where possible, and then we'll help you fill in the gap with estimates that you can trust where data is lacking. And all our ESG products are powered by the foundation of Preqin data that we've been cultivating over 20 years. This large database of top quality private market financial data. So you have the financial and the non-financial right next to each other, which is very powerful. And the capacity to merge informed proxies with financial data enable us to deliver a solution at scale that covers the whole market. So that way you can take a look at a single asset through to a portfolio and to a fund manager and even up to the institutional investor level and then all the way back down because it's all connected as the data flows.
Wonderful. I mean, I'm excited to hear sort of you speak a bit more at the event, elaborate about alternatives, ESG, what the solutions are. And thank you so much for those answers. To remind anyone listening, Jaclyn will be giving the introduction for the risk and reporting stream at the ESG Investment Leader event Europe. And it's on in London on the 2nd of November. We hope to see you there. If you want more information about the agenda, the speakers, you can go to www.europe.esginvestmentleader.com. Again, wonderful to have you, Jaclyn, and thank you so much.
Thanks for having me.